Let's take a look at the gold market. We've had some huge gains in gold stocks this week. On my stage analysis screener at screener.nextbigtrade.com, GLD is now back in stage 1 as well as GDX. So you're seeing some early strength in the two headliner ETFs for the gold sector, the gold ETF and then the large cap gold miners ETF. Notice that the palladium ETF, silver ETF, junior gold miners are all still in stage 4. So they're all still declining below these moving averages, while GLD and GDX are finally starting to touch the long-term moving averages, even though they're still kind of in a declining phase. If we look at gold mining stocks, we can see that almost 30% of stocks in this list are in stage 2 and about 10% are in stage 1, but the majority are still in stage 4. So this market overall is still in a bear market, but we're seeing some strength to start the year. And we do have some gold stocks that have made some considerable gains and that are in stage 2, which I'm going to talk about a little bit in this video. But looking at gold, a couple things to note. We've seen early rallies early in the year, basically in 2014 and in 2015 and starting this year. So this isn't really out of the ordinary at all, which if you haven't been paying attention to what happened the last couple of years, you might find interesting. But I mean, look at this monster rally all the way into March in 2014, and then a big rally to start 2015, where the price of gold actually got up above the 50-week moving average, which I kind of use as a filter to kind of serve as like the final barrier to where the trend is going to actually start changing. So if you can't hold the 50-week moving average from the downside as it's declining, you see that the market failed here and continued in the bear market. So that's why I kind of show that on this chart, as well as the 30-week moving average, which is typically used for stage analysis. One thing to note is that gold is actually outperforming the S&P 500 now, which wasn't really the case in 2014 or in 2015. So this is important because gold competes for capital from stocks and other asset classes. So if gold is truly outperforming other markets, it's going to start to continue to attract more capital going forward. So that's a very important thing to watch. And in stage analysis, you only want to own assets that are outperforming the major indexes. So we want to see gold continue to outperform the S&P 500 for it to be able to get back into a stage 2 bull market. And one other thing to note is that gold is actually overall creating a massive base. I mean, eventually, if it does move into a stage 2 and get back to 1300 or so, you're talking about a base that's over 3 years long now. So, the bigger the base, basically the higher in space bull markets go. For a good example of that, and I've talked about in the past, is the monster base in biotech, which created the recent massive bull market opportunity in biotech stocks over the last 3 to 5 years. So the precursor to this huge stage 2 advance was the major base that IBB built for multiple years. And the same thing's kind of happening in gold, as it's made this, the bear market for the most part completed in 2013, but we've been drifting down ever so slightly ever since. But in reality, as soon as we rally back above a little bit, we're finishing off this huge basing formation. Looking at GDX, what's interesting about this chart is that the huge volume that we've seen ever since this final base that's been put in since July of last year, um, it's important to see support hold eventually on a basing formation, and you've seen it ever since GDX tests like the 13 level or so. You see huge volume come in each time, and it's really held up well, which makes it more and more likely that this base might be the final base in this bear market. Um, Notice that GDX has done the same thing as gold, where it's rallied early in the year and failed. So that's one thing to pay attention to, because if we still are in a bear market, GDX will do the same thing here, where it'll maybe get a little bit further above the 50-week moving average, but then fail and continue lower. So instead of trying to predict what's going to happen, just be mindful that if we're still in a bear market, that's what's going to happen. But if we're in a bull market, we're gonna rally back above here, consolidate, and then potentially continue the advance higher. Gold in foreign currencies has been holding up extremely well, which is important for gold, because when it's in a bull market, it becomes the predominant currency above all paper currencies. So as this ratio bottomed in late 2013, it maintained its base all the way into 2014. Tried to break out and then consolidated the rest of 2015. So if this is a successful retest, and gold is back in a bull market, we're going to see gold continue to hold the moving averages, which are starting to move higher. Silver hasn't quite had the rally so far as gold, and really, look at what happened with silver in 2014 and 15. It didn't even get above the 50-week moving average, just like gold did. So this is a sign that this told you that the precious metals market wasn't ready to launch into a bull market. And it's kind of worrisome that silver hasn't done as much lately here. One good thing to point out, though, is that silver is starting to outperform the S&P 500, which didn't really happen back in 2014 or 15. So again, the precious metals are becoming a leading asset class because stocks are performing so horribly. Let's talk about some mining stocks, and I've found this interesting since this bear market's been going on for multiple years, is that the divergence in some of the mining stocks. We've seen, like, for example, Franco-Nevada bottomed essentially when gold bottomed in the mid 2013, and has rallied from then, but it really hasn't gone up too much because gold's been in a bear market. So the bear market weight of gold has put downward pressure on Franco-Nevada, but since it's a leading gold stock, it's still held up a lot better than the rest of them. So it's interesting to see that it's fighting two forces: the pressure of the gold bear market, but since it's a higher class stock, it's outperformed other gold mining stocks. And actually, the overall trend higher in the stock market probably helped Franco-Nevada hold up as well. So it's really just the weight of the gold market that's held this stock down. But you can see that since most of the stage 4 in gold pretty much finished for the most part in 2013. I mean, it did drift lower in 2014 and 15, but the big part of the stage 4 was done here. That weight on Franco-Nevada was released, and that's why it's held up above that low since then. Richemont Mines is kind of the same story, where this stock, it had a huge breakout in 2014, and this is like a textbook stage analysis where it breaks out on big volume, retests the 30-week, and then breaks out again on monster volume. Now the weight on the gold market, once again, he probably held the stock in check in 2015, but since we've been rallying so far in 2016, we've seen another huge breakout on massive volume in this stock, and notice how it's been outperforming the S&P 500 for the most part ever since it broke out in 2014. Detour Gold, another example where it's essentially been outperforming the gold market ever since it bottomed in 2013, and it's been trending higher except for this major pullback in 2014. But another example of a leading gold stock versus some mining stocks that are still way down in stage fours below their moving averages. Newmont Mining is an important stock because it's one of the biggest gold mining stocks, and if there's not money flowing into this, it's negative for the overall gold mining stock market. So to see Newmont break above the 30-week on big volume is important, but notice that Newmont is still, barely in a stage, or barely breaking out of this base. So we can't say that Newmont's in a stage two really rally quite yet. But the volume's been good, and notice that it's actually ticking above the S&P 500 down here. Barrick Gold, notice that it's still was in a stage four up until recently, but it finally has broken above the 50-week moving average, which it wasn't able to do in 2014 or 2015. So we're seeing more strength in Barrick that haven't seen since this bear market's began in 2011. Finally, the U.S. dollar. This is an important chart because the dollar was really what the force that's been holding down the gold market for the last couple of years, and the dollar has just been absolutely massacred this week. I did a video back in March last year talking about this parabolic top in the dollar and how it was very ominous, this parabolic move that's typically unsustainable, plus the euphoria on the US dollar was probably going to lead to a stage 3 topping formation for the US dollar, and that's kind of what's happened, although the dollar has maintained above the 30-week for the most part until basically this week, where it's going to close below the 30-week. Notice that it really, except for a couple weeks in October, it hasn't really closed below the 30-week moving average until now. So this is a very critical week for the dollar, and could be setting up what could finally push this gold market back into a bull market. So this is very important to pay attention to, and this is really the two big dramatic shifts in the markets this year are the U.S. stock markets and the U.S. dollar, which is both extremely bullish for the gold market. So to sum it all up, some very important things are happening in the gold market so far, but we have to be mindful that we could still see this early strength fade because we saw it happen both in 2014 and in 2015. But at the same time, it could not fade. So we have to be mindful that it could go either way. And if we see more strength in the gold market, it's going to complete its stage one base and then eventually break out into a new bull market.